Hey, good morning, guys. Eric here with you. This is just a real quick video. We're about to go live here in about 11 minutes now, so I just want to give you all a little update real quick to check out before we do get on that live session. So we're just going to take a look at the S&P real quick and kind of see what's going on with it this morning and what we need to be doing. Since it is Friday, it's the last day of the trading week. It's the last day of options expirations for this month, and also just based on the kind of recent action that we've had, we've been kind of looking to exit some of our long positions, so we're getting the chance to do that. So I just want to touch base on that real quick. And just kind of to start here, we'll take a look at this daily chart. Now I'm looking at about a 1 year chart here, but I was going to zoom this in a little bit. I wanted to show you this 1 year because I went ahead and added this other retracement here from this low to the high up here. That is our 1 year 52-week range, high to low. So I thought that might be a good one to go ahead and stick on there for you as well. I did notice that it has some correlations here with some of these other levels here. Now you notice that the 382 lined up with the 382 of this swing. The 236 of this swing right here is lining up perfectly with this 618, actually down to the penny, 2742.92, 2742.92. So like I say, guys, this stuff's not arbitrary. It's not just pulled out of somebody's ass somewhere. This is actually very, very used in the market. So you need to take a look at these Fibonacci numbers. But we kind of mentioned and we talked about, and we get down here to a little bit shorter, closer in, so we can see it a little bit better. We had talked about selling as we approached this this area of resistance up here that we were kind of looking at as a zone, and that zone happened to pretty much fall right in between the 50% and the 60%. So we were just kind of saying, hey, this is pretty much the zone we want to start looking to sell into. You know, we had, and I think it was actually a little bit tighter. We're looking at this initially as the zone here, and then we expanded it a little bit to include some of these other Fibonacci retracements just to give it a little bit more room. So this was kind of the zone that we wanted to sell into right here, and now we are in that zone. So after that, buying that 200-day moving average, we're probably up about 8% right now, 7.5 to 8%. And we're running into this Fibonacci retracement as we speak. So I think you go ahead and you start selling this one. I think it's very well possible that we close above it today. Just based on the way the market's kind of acting this morning, unless we have a lot of sellers come flying in here at the close, we'll probably hold up above it. But I think that this is really setting the stage for next week to be a declining week, or at least for the first couple of days. Now, it's very well possible that the fears have kind of shaken out and the market's going to decide to try to rally. I don't necessarily think that's what's going to happen, but that is possible. And if it were to happen, then we can take a look just real quick at what kind of targets we have here, and I'm going to go ahead and stick them on here for you. Because that pretty much will be an extension of this downswing here that we've just been a part of. That first target is at 29.65. So you know, that's we could definitely hit if the market does decide to continue on rallying it through here. So like I say, I'm not entirely sure, but it's possible that we go ahead and extend up to that level. But like I say, I'm thinking that we fell in this area that we're at. I also could have, and I'll go ahead and stick that on there for you just so you see it. There's one more level that we could add to this swing here, and that is the 786, 78.6. So we put that on there, and we see that that actually kind of lines up with, you know, the market's kind of bouncing this area right here before they fell, and when they fell, this level, if you just kind of look back, and I don't think it's as significant, but over here it was a resistance term support, so it might have a little bit of meaning, and that's at the 2800 even level. So I'm just kind of keeping an eye on that. The only other thing I'm going to touch base on real quick is the VIX, and I just wanted to show you because it has continued to fall today. Now we're down to about a 17.5. If you look at this thing on a kind of day-to-day basis, it just keeps rolling over. I did roll my 39 puts into next month, into March expiration, so I don't think we get underneath 39 in VXX yet, but I do think it does happen in the next week or so. So, alright guys, I'm going to go ahead and get ready for this Facebook Live. So this is just a little update to kind of show you where we're at. Like I said, I want to reiterate, I think you need to be selling into this. So, you know, don't be greedy and go ahead and start looking to take some profits off the table. Alright guys, talk to you in a little bit.